Walk through any bustling local market in Uganda, and you will see ordinary people going about their day, buying the things they need. Imagine walking up to one of these stalls and buying a packet of local biscuits. You hand over 1,200 shillings to the shopkeeper and walk away with your snack. By making that simple, everyday purchase, you actually just paid a tax. A specific portion of that money, about 200 shillings, is separated out. This is value-added tax, or VAT. The shopkeeper collects that 200 shillings on behalf of the government and passes it along to the Uganda Revenue Authority. Every person who buys goods in the market, no matter their income, is an active participant in funding the nation daily. The idea of pooling our resources to support the community is an ancient practice. Long before modern money, historical Ugandan kingdoms relied on citizens giving tributes. In Buganda, people contributed crops and labor to a system called the Oluwalo to maintain the kingdom's roads and structures. During the colonial period, this system evolved into formal monetary taxes, like the hut tax, which was introduced to fund the administration. Today, the URA handles the massive job of collecting these pooled funds so the modern state can run. That money goes directly towards our safety, paying the salaries of the police officers who patrol our streets. It also builds public schools and provides the monthly paychecks for the teachers who educate the next generation. Taxation is the mechanism that takes our individual wealth and transforms it into the shared infrastructure and security of a functioning country. The government collects this money through two main paths. The first category is indirect taxes. An indirect tax, like the VAT on those biscuits, or the tax on mobile airtime, is built right into the price of the goods you buy. When you pay for the item, the tax is already included. Because the tax amount stays the same, it creates a unique challenge. A student on a tight budget and a billionaire both pay the same 200 shillings for that water, which means the financial impact feels much heavier for the student. This brings us to the second category, direct taxes. Direct taxes are taken straight from a person's income or a company's profits before they receive the money. This system scales based on wealth, so those who earn more contribute more. It's a fairer system, though it is much harder to track and collect from small, informal businesses. A stable government requires a mix of both systems, the broad reach of indirect taxes and the scaled fairness of direct taxes. For new entrepreneurs, the biggest worry is what happens if they can't afford the tax bill. Hiding your income, altering your records, or smuggling goods to escape tax burdens is called tax evasion. This is illegal. Think of evasion like breaking a window to sneak your money out of a house. If caught, you face heavy penalties and your business can be shut down. On the other hand, tax avoidance is a legal business strategy. Avoidance is simply walking through a door the government left open. For example, the law allows you to subtract the cost of new farming equipment from your taxable income, legally lowering your bill. By learning these tax laws, you are allowed to legally minimize your business costs while avoiding the consequences of breaking the rules. Now that you know how the money is collected, what are the rules that govern this relationship between you and the state? The tax system is a bargain between the citizen and the state that requires a balance to function. On one side of the scale are your obligations. These are the mandatory duties every taxpayer must fulfill. You must register for a tax identification number, keep accurate financial records, and pay the correct amount on time. On the other side of the scale are your rights. These are the protections the government guarantees you in return for your money. You are entitled to respectful treatment, privacy regarding your business secrets, and the right to appeal if you believe the URA made a mathematical error. When the government respects these rights, citizens are far more likely to fulfill their obligations without feeling cheated. Taxation functions as a shared investment in the country's future. It funds everything from managing crop diseases for farmers to paving the major highways connecting our capital. Mastering these rules makes you both a savvy entrepreneur and a citizen who knows exactly how their country is being built. The next time you buy a soda, look at your receipt to see your active contribution to the nation. Your everyday transactions are the building blocks for the future of Uganda.